let's get into it. It's been a interesting day, last 24 hours or so. Basically, obviously we'll go back to the daily for the first thing. We said yesterday that we were kind of still in no man's land and looking for further downside. I honestly didn't think it'd flush straight from where it was, but especially going through the bottom of this candle. Mainly because there is quite a bit of trading volume that actually happened through this level previously, and there was the bottom of a vector candle there, but we'll get into the shorter time frames in a bit. But there was obviously quite a bit of liquidity sitting at some of the levels, and it's just flushed straight through it, taking out a whole host of positions. Just quickly look at, yeah, okay. Interesting, the dip is still being bought up. You know, you'd kind of expect it to taper off a little bit, but actually people are buying in harder on this particular dump. So that's an interesting little side note. The other interesting thing is we've sort of got a bit of a flat line in the global liquidity here, starting to tick up a little bit as the S&P 500 is coming down. Now, obviously, as we said yesterday, Bitcoin has been sort of leading the recoveries in the market and the bounces in the market. Once we've had sort of decent market downturns lately, but key level for me at the moment, one, it seems to be pausing here. So what did it get to? It stopped at literally 59,000 on the nose. This is on Bybit anyway. That is an interesting level, but I do think we get sort of down into this region here. We've got a fair bit of trading volume at the low here, and obviously we are right at the bottom of this wick, so there is potentially, like, there's a spike in volume here now, but this could be where the market tries to have a little bounce. Now, typically what you do like to see is a bit of a bounce up into at least a half of this candle. But what I will do is, let's have a look over here. So you don't always get that, and sometimes it takes a while before you get that. And the reason why I'm coming over here is just to look at similar sort of distribution events on Bitcoin. So, you know, pumps where we had some sideways distribution or accumulation, but typically I want to see the pump going into sideways action, and then to see what happens once we get a bit of a flush like this. So be careful of wicks. As I've said many times before, Bitcoin doesn't like to leave these big wicks on the daily. If you look back in time, there isn't a lot of them. Like this one here is kind of recovered by the next candle. There's a little bit of a wick there, but you know, it doesn't like to leave huge ones behind. That one there's probably the biggest one that's still remaining, but it was on a doji candle, so it kind of recovered in a way. But typically, every time I've seen Bitcoin dump and leave a big wick, like particularly these sort of dumps, so you get a massive flush and it comes way back up, typically over time it will come back down and recover that before you actually see the move up. Okay, and that's assuming that it's happy to move up at that point. Like here, you recover it, but you actually flush down further. So just be careful on any sort of bounces that we could see further downside here. But Bitcoin is interesting because commonly when we do see these flushes, we don't often get huge bounces back up before we get that flush down. Like this here, just sort of grinding down, and then just we fall through this level and then it just goes bang. Okay. That's kind of what it feels like at the moment. Like you see these, it just doesn't have the interest in it to really push higher. You might get some candles up, but yeah, if we sort of hit the bottom of the current range and there's no real bounce, don't necessarily expect one. Okay, be looking for that break. As soon as we break the wick, it's not necessarily going to bounce very high before it flushes. So signs of turnaround will have to be really good signs of turnaround. Okay. But at the moment, we've got the 200 EMA there, which will potentially hold it up a little bit. But at the same time, you look at that one, this one here, we stopped just above the 200 EMA and bounced back up on that daily. But then the next candle just flushed straight through it. So, you know, in these sort of conditions, you got to wonder. This one here did have a little bounce off the 200 EMA, but if you go back and look at these flushes and these distribution events, the 200 EMA wasn't necessarily very well respected at that point of the rollover. Okay. So, and same here, really. Like, same sort of thing, just grinding down, falls through, and then bang. So whilst I'd like to see a bounce here, and there's some other confluence here in terms of the volume, which isn't huge volume, by the way. You compare it to what's been happening in the distribution area, this whole area, and the fact that it just flushed sort of straight through this amount of volume here. Yeah, I certainly wouldn't be taking any long-term longs at that point. And to be honest with you, I haven't been. I was mucking around on one of my accounts last night, just basically looking on the really short time frames, the 1 minute and the 5 minute stuff, in around this level, just looking at I was actually looking at the volume footprint, just looking at the way people use volume footprint and just trying out a few things of my own, to see how I might be able to incorporate that. Yeah, it's an interesting. I'd expect this to actually come back down into here. Maybe not on this candle, but it's coming back here at some stage. But essentially, the volume footprint you're looking at. There's the settings I was using for those that are interested. That should be about right. And it gets kind of hectic on the charts, but things like, where was I? I think I was mucking around in this area. Alright, that was this morning. Yeah, it was around here. Ah, that's right. I saw this dirty big wick here on the 5 and the 15 minute charts. I thought, oh, I might have a play around here and just see how it develops. But typically you're looking for imbalances in the chart. So the darker the red, the higher the imbalance in terms of there's lots of people selling there and not many people buying. At least I think that's what I gathered anyway from all the stuff that I was looking at. So yeah, this is sort of what you're looking for a turnaround. You got basically no sellers there, but you got buyers, so that just pushes the market higher. But in this area here, we got a lot of sellers, but there were no buyers. In comparison, like there's an imbalance there. There's a delta. So you'd kind of expect price to come back into this level at some stage. Now, in saying that, the value area high and low of this particular candle were quite high, near where it finished. So, you know, and it was below this. There's a big value area in here as well that you would expect it to gravitate towards. So, two big wicks like that. Did expect it to move up a little bit, and we did get that movement. And then it was just sort of looking for trades, or wasn't necessarily trading based on this. I was trading based on hitting some key levels of sort of resistance and EMAs and things like that, but looking for confluence from the volume charts. So anyway, that was a fun little exercise, but throughout this whole thing, there was a lot of selling imbalances. So a lot of sell pressure. We just got a lot of flushes on the shorter time frames and stuff. So yeah, I was looking at it thinking, okay, it's probably going back down there, but when we were forming this structure here too, it was hard to tell whether or not we were actually, I'll just take these off. It was hard to tell whether we were actually going to, why won't that change? Oh, just taking its time. You know, I was sort of looking for the recovery at least into the 50% of this candle here too, the vector candle. So that happened after I went to bed, but I wasn't confident. Like, this would have actually been, technically there was some reasons why it would have actually bounced from here. So I did close out the short that I had running, and kind of wish I hadn't now, but this is sort of what we're seeing. We're seeing a big rollover. That's an interesting candle there. Can't trust the 5 minute too much at the moment with these sort of flushes, but that is an interesting one. Again, big wick to the downside. That is most likely to be recovered. Just a matter of when. So the market's all about timing. So anyway, that was just a little sidebar for today. It's worthwhile, if you're interested in the shorter time frames, to actually do some training, look at some videos on using volume profiles in your trading. They've interested me for a little bit, but last night was the first time I tried to fuck around with them. I will. Yeah, we're still in sort of bearish control zones for most of the shorter time frame indicators. This is one that I'm just fucking around with at the moment, as you can see. But that there is still very much bearish. Like, oh, that was the other reason I was playing around in here and wasn't confident that it was going to break back down, at least in the short term, was because we were sort of basing on this particular version of the MACD that I'm using. This here is actually based on 10 and 200 settings for the MACD. The reason I was looking at that was just to see if there's a stronger trend, or I can use the MACD for a trend bias. And this just shows you that the 10 EMA and the 200 EMA are nearly $3,000 apart at the moment. That's quite significant. I think if we went back in time, you're not going to see that very often. So it got down to 3,600 on the last time we got into this sort of area. So take that as you will. You know, oh, there's even more over here. So that's a much quicker flush. So as much as you think, yeah, these things look overextended and stuff, just know that stochastic momentum and MACD in particular, they are just measuring the distance between two things. There's no upper limits to what these things can actually hit. It's only really a statistical thing in terms of once they get into these levels, statistics show that, yeah, okay, you need to be looking for a reversal. You just have to be really careful about your trades that are in those directions. So that's just sort of how I'm looking at it at the moment. I forgot to say it at the start, but this isn't financial advice, obviously. I'll just have a quick look at the miner flows as well. And that tab is slow to load. Hang on. Net flow. I'm going to have a closer look at this chart. I'll bring it up. So this is saying that miner net flow is positive. Now, when I read the description, inflow minus outflow. So miner reserve is actually increasing at the moment. So the miners are holding on to their Bitcoin. This is a bit of a capitulation thing, I think, for the rest of the market. But miners aren't selling into this at the moment, which is interesting in its own right as well. So we might be coming to the end of this in the short term at least, but I said that yesterday too. I thought we were having a bit of a turnaround there, and we did not. I'm just gonna have a quick look at a different chart. I haven't done normal stocks yet either, just because Bitcoin's particularly interesting to me at the moment, but I'll touch on them in a sec. So, lo and behold, we would have actually, if I had have left the old bot running, we would have hit TP4, we would have smashed it. Wow. The new bot didn't actually pick up a short in here. It uses different rules with more certainty. Obviously, we're trying to move away from staying in trades for this long before they move, because they can go in the opposite direction on you. But yeah, wow, that would have a nice little pickup. Might even just run both side by side, because they do take different trades quite often. I'll have a look at that. Anyway, overextended to the downside for Bitcoin. Yes. Do we see it bounce into the end of the day? Possibly. Would I expect us to leave that wick there for very long? Not really. Key targets for the bounce, if we get it, where are we? Where's my horizontal? So key targets for the bounce are going to be somewhere around there, which is almost 50% of that candle. And maybe up to the value area low, but to be honest with you, don't know that it would hit that. If we're going to flush further, I would expect it to do it from these levels, just based on what it's done throughout history. In which case, your next target has to be somewhere around here. Now, I'm just going to extend out this okay. So this is kind of an area that I was looking. I still think we may get a bounce off this. There's a small chance, I reckon, we'll get a bounce off this. We've bounced from here before, but doesn't necessarily mean anything when Bitcoin's having this sort of run to the downside. This will be a bounce point, or at least a sideways chop point, and then maybe we get down into this level. I'd kind of be surprised if we did, but I think to get down to this level, we're going to have very much a risk-off general market, and I'll just do actually. That actually lines up pretty well. Yeah, maybe a bounce back up into that level, but short term, I think we'll see how we react. We really need a lot of buyers to come in at this point, and I don't think people would see the value in Bitcoin at this price. And that's what you've got to kind of have in the back of your mind, is Bitcoin on sale at the moment, or are people looking at this going, nah, I'm going to get a better price down here? And yeah, I have a feeling a lot of them are looking at it going, I'm going to get a better price down here. Anyway, not a bad dollar cost average price. Like when we were up here, if you were looking at that going, geez, I wish I had bought more Bitcoin at under 70,000, then probably just dollar cost average in a little bit here. I actually converted some of mine into inverse derivatives at around this point, because I thought, it's not a bad time. I got a bit of a discount there, and I'll probably do some more now. I think that would make a lot of sense. The only thing is with inverse derivatives, you can't use bloody hedge mode, which I was, like all these trades through here, there was actually hedging going on. I think I ended up coming out slightly positive on that. Yeah, it's just chopping around. I think I ended up pretty flat actually. Yeah. Up a little bit, but that's over a certain time frame. Had one decent loss there. Anyway, so to the rest of the market. Sorry, this is a longer one today, but it's obviously a reasonably interesting day. Finally, Bitcoin's actually doing something. Hooray! And the Nasdaq's dropping, so that's good and bad. Bad if you want to hold on to your Bitcoin and don't like seeing it go negative. Good if you want to buy in more Bitcoin at a lower price, or if you've got shorts running at the moment. So, big gap here. Looks like it wants to fill that. That's actually on the fucking futures too. Yeah, I'd be expecting that to fill pretty quick. And this sort of area is definitely a target for that. Nvidia, expect a decent drop on this too. Now, the thing with these sort of drops, right? I don't know how bad they're going to be because there's a lot of people that are doom and gloom at the moment. A lot of people talking recession and, you know, we're going to have a 50% correction, all that sort of stuff. We're going to have a correction. We're having a correction. Like, that's happening. But recession? Not necessarily. I think, as I said, I'm still, at the moment, the thesis is that, yeah, we'll have a correction, but we will bounce into the election. However they do it, they will figure out a way to get the economy looking strong coming into the election. Now, whether that's we come into here, which sort of end of July, we could end up somewhere down here by July, August, and that would be a pretty decent correction. You know, 10%, that's a healthy correction on the markets. And that would get you into this sort of structure in here. Don't be surprised if that's, you know, the 5,000 mark as well. To me, that's going to be an interesting level because I suspect we will get a bounce there. Now, does that lead to the topping of this? So, what my thesis for this will be is we're going to get a big head and shoulders over a long period of time. So we'll come up here. In general, we'll probably come back down in here somewhere, bounce up, may even get to new all-time highs again. But the recession's not going to happen when everyone thinks it's going to happen, okay? Or the big flush on the markets isn't going to happen when everyone's expecting it, okay? So maybe we don't go to new all-time highs, but, you know, something like this, you always get a bounce, you never get a clear flush, you get that dead cat bounce, and then we flush. And look, that obviously I would draw that out a bit further. That time frame is too tight. But, you know, something like this with bounces on the way down would sort of make sense to me. And then if we did get that, if we did get that sort of scenario, then it plays out for this coming back down into this region here, at least on that initial leg down from the neckline, which is a pretty high volume sort of trade area, and you're probably going to get the 800 EMA in that same sort of zone as well. Okay. So, but even then, what's that? That's from the high. Still only 20%. For a proper recession, correction, bear market, whatever you want to call it, I probably am expecting it to come down 30+% over the next year. Like 2025 potentially will see a pretty major correction. But, you know, do we just come back into this level here? Or do we go into the COVID levels? Come back to the area that we probably should have hung around with in for a bit longer. You know, theoretically, when COVID hit, the world was about to, like, the economy was up the shit anyway. And people were saying it was a recession we had to have, but we'd never really had it. So do we come back into these sort of levels, which would be roughly that 50% correction? In which case, you're not going to see any quick bounces, I don't think. Anyway, that's a long-term look there of what I think might happen. The equal weight is actually quite extended on the stochastic momentum. So, but again, what we said the other day, this looks like rotation into other areas of the economy. So the big seven are having a tough time at the top here. They seem to be dropping, but the overall S&P 500 is actually evening out a little bit. It's not like it's breaking to new highs or anything, but there's money shifting. It's not necessarily... Oops. And again, the small caps are going up a little bit. So it's money shifting around. It's not an overall panic. We have seen a couple of defaults on AAA securities. I'm not a bond expert or anything like that, but there are some other guys I've been listening to lately. Eurodollar University. I mean, he's very much bearish in everything he talks about, but it's just interesting data points that he brings up where they look at overall economies and things like that. But yeah, they talked about the AAA securities losing money for the first time in ages, and similar to sort of the 2007 area. XLY, XLP, we've had a down day on that, so that is coming down with the market, suggesting maybe more of a correction. Looks like the Dow is outperforming gold for the moment. Nothing to really write home about in any of these. Dixie's taking a bit of a pullback. I wouldn't expect it to pull back much more than sort of the 104.6 mark at this stage. Just come back into these levels at most. It may just keep going higher. The VIX, we finally got a little spike, but the VIX is still really low. That's interesting. TLT still finding support around this 200 EMA. Looks like it still wants to go higher. Bonds are dropping a little. Bond ETFs are up a little. High yield is down a little. What's the skew doing? I haven't looked at that for a little bit. The skew's actually going up. So again, it's kind of suggesting there's a bit of support there still in the market. Copper is telling us that the market's not healthy, supposedly. Gold is, geez, it's finding good support on the mid-band of the Gaussian channel. Whether that's just a coincidence or not, who knows. Aussie dollars holding. M1 money supply is up a bit. Looks like the Brazilian dollar found some support in that region that we talked about the other day, which is interesting. That might mean the US dollar might slide a little bit. So I mean, the Brazilian doesn't really play much into the Dixie or anything like that, but it's just an interesting turnaround. Have a quick look at the euro. Yeah, the euro is kind of maybe forming a bit of a bottom here as well. High, low. Need to get clear sort of structure above this level though for that to play out. Sorry, did that one. Yield curve still inverted, still trying to push higher. People are still just interested in the short term. Money. Percent of stocks is still low, but it's pushing up a little bit. So again, it's the breadth is actually increasing while the top end is coming down. And oil is pushing higher. So few things like typically oil pushing higher means stocks will generally come down, but they're kind of the ones you would normally expect to come down are kind of going up at the moment. So the market's trying to figure out what the fuck to do by the look of this. Aussie market is languishing a bit. I mean, this looks like a big distribution to me, but you know, we've got a fair way to go before we start to panic on it, I would think. Let's have a quick look at Bitcoin. Dominance is down hard. ETH dominance is actually rising. So that's an interesting one. So ETH must be holding up in comparison, and it is. Like, when you think about it, ETH hasn't hit the bottom of this candle yet. It's still well within the distribution region. Whether we still see it flush if Bitcoin flushes, I have to wait and see, but it's actually looking pretty strong. Like, there's not... Where's my volume? Oh, my volume chart. Interesting. We've just bounced off that value area low there. 40% value area low. Could definitely come back into this region here. Yeah, again, if we flush on this, then so be it. But this, to me, like the fact that ETH is holding up like this, suggests that we may not get a flush straight away on Bitcoin, but it's guesswork at this point on this sort of time frame. You need to be looking at those shorter time frames for confirmation of bounces. Have a quick look at Sol. Sol's holding the bottom of this range for the time being. It is below the 200 EMA though. Interesting daily if it closes here. Big volume, suggesting some support there. I think that's about all. Like, we go back into this one. Are we going to get a huge turnaround here? I mean, yeah, there's been quite a few times during this dump that we've had divergences on the way down. That's why yesterday I actually thought that would be more of a bounce, more support around there, just because we had significant divergences on a whole heap of different indicators at that point. We did get a little one, but it only came back into the 50 EMA on the 15 minute and then dumped straight back down. So we got another divergence here. There's not a divergence on the CCI though. It is kind of trending down still, but it is quite low. That's a really choppy CCI though, that one. Must be a different setting. Well, it is a different setting. That's the old bot. But yeah, for either of the bots that we got, the new or the old one, to actually confirm along the long time frame is still very much postured to the downside. So it would take a while before they start to look at longs, which is why I'm working on some shorter time frame ones that will hopefully be better at sort of picking these ones as they break out and stuff. All right, that'll do it for today. Sorry, it's a bit of a longer one, but interesting chart today.